Hey guys, hope you have a good weekend. I wanted to put out a video. Got some good daily chart tips. Going to be talking about some moving averages and trend, different things like that, stuff to watch for on a daily chart. But I want to also go over strategy and staying true to it, not letting your bias cloud your judgment like this guy right here. So Friday, I actually traded Qs, and I let my judgment from thinking this nothing burger news, which was kind of some bad news, squeeze the market. Instead of not seeing Friday morning that my strategy and my setup, my all-time favorite, that it's a part of my strategy sometimes. It was just beautiful, and I missed it, and I missed it, even though. So I caught the short, which was cool, but that wasn't the trade. The trade was, and there's multiple facets now. So it's not like, hey, you see a bull flag, get in it for some weird breakout thing or whatever. And a lot of what I do, it looks like I'm trading reversals, but I'm really not. I'm really just trading support and resistance on a daily chart, and it's really that simple. I think these YouTubers since 2020 has really kind of distorted the beauty of support and resistance and trend, and how they're really meant to be traded. But anyway, so I let my strategy was there, my setup, my play was there, dude, and all the signs were there, except I wasn't there in my head on Friday, right? And like I said, ended up catching a short, which was fine, but I was fighting it, and I got in pre-market highs and was adding all the way up because Qs had a gap fill. Daily chart, right? Qs had a gap fill right here. This is SPY's chart, but this was a gap fill on Qs because SPY did close it. Anyway, instead of reading the charts and letting my bias get to me, so it was really beautiful because it was been so long since the 9 had gotten tested, and so it gaps up above the 9. There's a trend right here. Let me show you this trend. This trend, and you can see it's a relevant it's a relevant trend, right? So that's a piece to the puzzle. My risk from here to here on Qs was 85 cents. That's a big risk, man. And I add into my risk, so I was in like 12 contracts, just trying to correct my average because I knew I was going to pull back. But I was just fighting it when everything was there that I shouldn't have been fighting. But hey, I'm human, all right? We're not robots. We're not mechanical. So anyway, it gaps above the 9 and gaps above the trend. You have all kind of support right here that you're protected by, and it goes on further out. SPY literally dipped into that 9, so I like a dip above the 9 or a big pop into that 9. And that's what they got. The 9 was really right here, but it got sucked up just because of the day's squeeze, right? It's because it ended up squeezing out. But I would have risked off this double bottom right here, which was 65 cents roughly. I counted 55 the other day. But you also had this day's highs. You have this trend right here. You have this day's highs. Let me go to this. You have this day's highs. You got this day's close. And, it just goes on and on. So you're protected in this trade. It's okay that if it dips a little past the 9 into this trend, and you're adding into it, like there's really nothing to really just stress about. Knowing what's going on the daily chart, knowing where your support and resistance level is very important. So a gap. So coming out of a dip, gaps above the short-term moving averages. Plus, there's a trend there, and that's just another piece to the puzzle, just to give you the more the confidence, right? But yet I take the short. I mean, that's the play, man. And number one, why it goes against my strategy is because I prefer a dip at open uh, with a coinciding daily chart like this. You know, it screams along, and I go short, but it screams along. A pop at the open would have said, okay, I'm weak. The short covering, get in at resistance. But a dip at the open, for the most part, on a strong pre-market, you had a strong day before. The daily chart hasn't been so strong short term, but you still had all that support there. So dip at open would have constituted a long all day, and that's kind of how I trade. Pop at the open, I'm looking for a short. And it just depends on what the pop looks like too, but mainly a dip at the open. I'm looking for some kind of long. And you had all the signals there saying, "Hey, it's a long." The chart saying I'm a long, no matter what I'm thinking the news should be. And the thing is, I'm not the only one thinking that. And there's an old saying that a mentor used to say, "When the whole world best short, go long," and he was absolutely right. And that's what people were looking at. I mean, you have a lot of money going in short on this, and that's really why you have such big days right here. Because you got weird news that's really bad news, and bad news is good news is bad news in this market, and you got people betting short because this economy is weak. And, people who are contrary and just go by the charts, they're going long. Right, and then you got shorts fighting each other. It's why you get these big days, but because ain't no smart money really buying up here. I mean, you do have some average volume, or a little bit above average volume, but and you can go back and look at the volume, and you can tell where they buy at. Right, they buy on dips, but yeah. So I had a conversation the other day on one of my comments, and it's really, I guess I need to kind of explain. So I have the 5 EMA, 9 EMA. That's all the EMAs, and you can go back. They're very relevant. 20 SMA, 50 SMA, 200 SMA, and there is a 100 SMA. I just kind of, I don't know. I don't really play it too much, but it will come and play from time to time. Not often, but you got a lot of money on these moving averages. You got a lot of institutions. You got a lot of smart money watching these moving averages. And so that's why I use them. And so the 9, man, SPY will follow this 9 all day, whether she's rejecting or bouncing off of it. The 5 will work in the same sense, but it just depends how extended it is from it. Right? The 9's kind of the same way. I love that, especially this. It pops up, it gets extended from the 9, and it pulls right into it and holds. Actually, I might have had an overnight call right here, simply just because of that. Right here. Also, these moving averages. Let's take a trip over to Apple. See, these stocks will do this. See, Apple loves the 200. Of course, she loves the 9. I think they all do that. And you have flags for continuation plays into the 9 too, just like on these. See, I think, it's weird. I think since 2020, I think these YouTubers have kind of distorted the beauty of simple support and resistance, and moving averages and all that. But, what I mean is they kind of overcomplicate it, Whatever, my opinion. But hey, Apple loves this 20 too. It's funny. On my cell phone charts, it actually shows the 20 right here, which is either way. She bounces off of it. But these are my Thinkorswim charts. But She goes right into it. She will reject off of it. She'll pull and hold. Constantly. It's a big wall of resistance for Apple. Constantly rejecting this 20. But in the uptrending market, when she gets extended from it, she will hold and bounce. She will do that. She loves the 20. You can go back throughout the history of these charts and look at all that. See, they all got their personalities. They all kind of got their thing to them, and it's the same way with each stock. Another thing about daily chart. Come on, man. So you got trends on daily chart. You got moving averages. And I think I showed you kind of a little insight about how I look at support and resistance. I'll also go on here, get my little crosshair tools out, and I'll measure these tops. Kind of get an idea, seeing which way are we extended. Because for the most part, there's a pattern there. Kind of let you know when it's time to start. Like if this trend's been going on for so long, it kind of lets you know, like, hey, maybe time to start thinking short, or maybe time to start thinking for some longs. And you also got your higher lows and all that, your lower highs. Yeah, daily chart, man. I'm blind without it. But anyways, I hope this video made sense. And you can see, I'm going to go one thing here. You can see even this candle, I would have bought this again into that 9. Because number one, it pulls up and you got distance coming into it. That's a key with support and resistance. If you got distance and speed coming into it, that's what you want. That's beautiful. That's even more beautiful than this. Even though this broke it, it does not matter. Because of all this other support and this trend, it was really just testing this trend. Man, that would have been beautiful. I would have added, if I would have gotten right here, I probably would be clicking, getting in contracts. And let's see this. You see this? How it just kind of pops up and then it just kind of flags back. Then it holds, right? Pops up above that 9. She's holding, baby. And then she just launches, dude. You could have held that back to these highs. And knowing that it's Squeezy Friday, you would have had to sit through all this, which these highs would have been beautiful. Going back into these highs would have been beautiful. Right here, pre-market high, maybe leave one on until Qs. A lot of times I'll trade SPY trading Qs, or I'll trade Qs trading SPY. I'm a twisted individual sometimes. But you had this gap fill that didn't never get filled on Qs. So that's why I probably would have held a little bit past 1 or 2, probably 1 past it until Qs tested it. See that? And yeah, dude, you're super protected in this trade by trend, pre-market. See that on the 5-minute? Thursday's highs. High of this day. Almost open this day. It's pretty close. Close of this day. Open of this day. Open of this day. Highs of this day. If you're not in the habit of looking at this daily chart and studying it, this is what you study. This is how you study trading. You look at this 1 minute or this 5-minute chart and you see how it correlates with this daily chart. That's it. You want to know how you study trading? That's it. Study the moves into it. Now this, I probably wouldn't have got in, I probably would have just got in small. Once I saw these wicks and it holding, then I would have added. But I probably would have saved more for this lower trend and ultimately pre-market lows, which really wasn't. Even though it looks scary getting in right here, but that's why I started in small. And whatever happens, happens. But once I saw it holding, I would have ended up adding into this. Yep, because Q's launching at the same time. SPY still kind of holding. She'll go. Big dip into it. That's what you want. And the same way it works for resistance, but you got to be careful more of resistance because of shorts. Anyway, here's my lesson, dudes. Bias. Stay true to your strategy, your setups, support and resistance. Stay true to what the chart is telling you and quit worrying about the news and just because it squeezes and you don't think it should squeeze, because 9 times out of 10 everyone else is seeing that same thing and they're betting short with you and squeezing this thing up with you. So that's my intake for this weekend. I hope you guys have a good week. I'll be working nights, so I'm probably not going to be trading until around Thursday. But I get to soak these charts up, and each week, each stock kind of has their own personality thing going on. So I hope you guys have a good week, and God bless.